Welcome back here at Goldberg. Today we'll be talking about the importance of knowing where your money is and who's controlling it. So, as a send-off, or really more of a start-off at this stage of the video, we have the Bitcoin Standard, eminently accessible book, even if you're not a fan of reading, and then, of course, The Creature from Jekyll Island. Extraordinarily dense, slightly conspiratorial, but in a good way. It might take you a few weeks or months jotting down notes, but it could save your life. The breakdown of what the Fed is, central banking, how it impacts your everyday interactions, it's quite irreplaceable in my opinion. So I'll drop links if you are interested. But the story we're discussing today has been around at least since the spring, and yet you would think, much as happened with the SVB bank collapse, it would be talked about every news source. But not so much. I only found it due to I was perusing Politico one day, and I check a lot of different news sources on a consistent basis. Perhaps Zero Hedge had mentioned. This is signs of what might be coming down the line here. So Synapse Financial Technologies, emphasis on technologies, we'll get back to that in just a bit, was an American banking as a service company based in San Francisco. They filed for Chapter 11 bankruptcy protection in April of 2024. Synapse claimed to keep customer deposits in FDIC-insured bank accounts. However, Synapse was not a bank, no bank failed, and the FDIC deposit insurance does not directly protect the depositors of Synapse accounts. That was very annoying to read for some reason. The company was backed by Andreessen Horowitz, makes sense. Founder is Sankit Pathak. Yup. So, in May of 2024, they had appointed FDIC former chair Yelena McWilliams, and she said there was a shortfall between Synapse's records and those of the banks, estimated at 65 million to 96 million. Then you have Yotta Savings, which is a fintech company that we relied on Synapse to manage customer deposits, released data in November of 2024 showing that 13,000 plus former customers lost deposited money due to their bankruptcy. They were refunded 11.8 million, a fraction of the 64.9 million deposits. Let that sink in there, how much money just magically vanished. Here we've got some more information. Customers who have lost sums ranging between 7 grand to over 200,000. These people sold their house and stowed away the proceeds, 282 grand, in what they thought was a safe place, an account the savings startup Yotta held at a real bank. We were informed last Monday that Evolve was only going to pay us $500 out of that 280,000. Yeah, this is not made up, my friends. This sounds like a third world country. It sounds like a collapsing Balkan country once communism disappeared, but no, apparently not. 96 million of customer funds missing. One Yotta customer, Zach Jacobs, logged into the website, found that he was getting back $128 of the 94,000 he had deposited. So they started organizing for victims online. They say they've lost a combined $30 million. Earlier this month, he received an unexpected PayPal remittance from Evolve for $5. I swear to God, dude. We were assured this was just a savings account. We're not risk takers. We're not gamblers. Yeah, good luck, dude. There was another person. Yeah, here we go. Andrea Caliguri. She was owed 22,000. She's getting 81 cents. What exactly was the problem here? Well, because they're not technically a bank, and we can just go ahead and I will just forge here. Chime. Please don't use Chime, by the way. I know they target you a lot, especially if you're black or Hispanic. They push this, oh, you get your money early. It always sounds like the commercials are for folks who use payday loans. They can't, oh, I need my paycheck. I need a bridging loan to make it to the next day. I mean, seriously, do not use Chime because Chime has a disclaimer that states, quote, it is a financial technology company, not a bank. Banking services are provided by the Bancorp Bank, North America, Stride Bank, North America, members FDIC. Yeah, they try to form these partnerships, but then they start, if anything goes bad, they split hairs as to whether you actually have any protection. And this goes for stuff like Cash App. If you're using Cash App and you're actually storing your money there for some special, if they're paying you interest, whatever it might be, giving you special deals, remember unless you have a card with them, then they say you should really ideally have an account with a partner bank. So the first one they mention is Wells Fargo. You don't actually have any coverage, so that money is gone. Much like if you put money on a crypto exchange and it collapses, the money's probably gone. Robinhood does something similar with the partnership stuff. You should ideally be getting Robinhood Gold if you want to put money there, outside of regular stock investing, certainly if you want to try to bank with them at all. And they do the same. You have to have a partner bank to really be eligible for protection. So, yeah, this is potentially very dangerous because what happened to those people, due to the fact it's not a bank, they have basically no legal standing. And you can do a class action out your ass, but it doesn't really matter. You're sitting there going, "Where's my money, Denny? Where's my fucking money, Denny? I just need 5 minutes." It's not going to be 5 minutes. It's not going to happen. So you have to be very careful where you're putting your money. I get the fact, Robinhood, they have some cool deals. I was thinking of doing that IRA transfer, but they're not doing 3% right now, so I might hold off until it's released once more. But like as far as saving money in a particular place, like just trying to earn interest, you really have to look at what you're investing in. I know Ally Bank is an actual bank, so supposedly you're covered with that, even though realistically, FDIC insurance is not going to cover you if everything goes belly up. But the fact is, you have more of a basis to launch a legal complaint if anything goes wrong. With these financial technology companies, banking as a service, yeah, not going to happen. It's libertarianism, it's the Wild West. I mean, I'm not even saying that necessarily facetiously entirely because the idea is you have to know. Don't trust these people. Make sure you're checking what precisely it is. So ideally, if you're actually putting money aside, whatever, in a savings account, which is not very effective anyway, make sure it's a regular bank. Preferably get a credit union, which those are smaller communities. They're at least on paper meant to be not for profit. They're insured through NCUA as opposed to FDIC. Once more, could they handle every credit union collapsing? Probably not, but you're in better hands. Now, if you say, "Oh, but I'm not eligible to be part of a credit union," most of them will have some deal. You join an organization for $10 and now you're eligible. So try to put your money in something like that, even above the regular commercial banks. It's really something I would suggest. Now, realistically, even there, it's a bank, right? Your money's being eaten up because of inflation. So you either put your funds in stocks that are having preferably a pretty steady amount of growth, or index funds, that kind of thing, low cost index funds. We already talked about that in the other video. Growth stocks, but you got to be careful with growth stocks because, be honest with you, some of these growth stocks are the same types of companies that are going to end up collapsing like Synapse did. So just keep that in mind. Bitcoin is an option. Bitcoin, we've heard everything from it's an investment, it's a hedge, it's going to replace the dollar. I would see it at best as a saving mechanism, but you buy your Bitcoin, you're going to have to go through the headache. And yes, everything with crypto is annoying. There's nothing convenient about crypto despite all the propagandists. It's like 5, 6, 7 steps to do pretty much anything you're looking to. But put that crypto onto a cold storage wallet, one of those USB type things. Research into that, what a good one is. At one point, they said Ledger. Now people are crapping on Ledger. They're saying it's not secure, something else. It's the best way to approach that sort of thing. And then you've got gold. You could buy the physical gold. Now, obviously, if you do need capital, you're going to have to go manually and redeem it. But you could even buy Sprott Gold Funds, GLD. Not as perfect, right? Because you're not physically holding it, but it does provide a little bit more of a hedge and probably is going to do better over time than your interest account. So that's just something to keep in mind. You can, of course, go to, it's a site called Verybank, I believe. I'll put a link to it. And I'm not going to say it's the cheapest service, but apparently they do breakdowns of banks, like how secure are they? Is there any way, are they carrying the appropriate amounts of, let's say, hedging and insurance type programs? Because what's interesting, if you try to find deposit insurance independently, that's not a widely available product. That's either because everyone just falls back on the FDIC, or maybe the FDIC, there's some kind of rule where you're not allowed to as a private company. Because I would invest in that 100%, right? If you've got money in an account and you want to pay a little bit a month to ensure that if it goes belly up, they have to pay it out like a policy. That would be good insurance. A lot of insurance is kind of a scam, but not that. So, yes, please take into account where your money is and look it up, because if this happens to Chime or that happens to one of the, oh, we're giving you extra interest compared to your bank. Yeah, your bank sucks as a tenth of 1%, but then invest in stocks, invest in funds, or invest in Bitcoin. Don't put money, if it's money for saving or building, don't put it in just some freaking random ass financial technology savings account, because you have no real recourse. You're going to get pennies on the dollar if it goes belly up, and they're going to be laughing all the way to the bank, the actual bank, not the fake bank that they sold you. Just a piece of advice. Stay safe.